Another issue still on the radar is debt, and that's obviously an issue globally. According to the Debt Management Office, public debt rose to 44.06 trillion in the third quarter of 2022, and the total debt stock rose from 42.84 trillion recorded in the second quarter to 44.06 trillion in the third quarter 2022. Let's get an outlook of Nigeria's debt profile in 2023. Join us now is Kelvin. Emmanuel, CEO Derry Hills, join us from Abuja. Great to have you. Happy New Year.
Good morning, laddie.
Good morning.
Happy New Year to you.
Yeah, it's all about debt at this point. It reminds me of that book where they talked about the kiss of debt. It looks like it's becoming a global issue right now, obviously with tightening rates at this time. But the WEF does not see debt as the main issue for Nigeria in 2023. Talking about the risk, I did read that report earlier. How are you seeing it?
Laddie, please, can you just backtrack on the question? I didn't get.
Okay, so yeah, I did read the report, by the WEF. They said the major risk for Nigeria is the cost of living crisis, but debt is also a risk, but it's not the major risk. So how are you seeing the whole debt issue with Nigeria?
Well, cost of living, the debt has there's implication. You can draw correlations between cost of living, cost price index, inflation, and the debt situation in Nigeria. If you look at the fact that the government has accumulated about 24 trillion naira in ways and means lending, which started in 2007, by the way, and you consider the fact that that has had an impact on currency devaluation in Nigeria and the acceleration of inflation in 2022, for 10 consecutive months, the central bank noticed that the inflation kept rising consecutively for 10 months. And in several meetings, it raised the MPR by 500 basis points. So there's a strong correlation between inflation, cost of living, the fact that the purchasing power parity of Nigerians has reduced by about 47% over the last 8 years, since President Buhari took office, and that's the per capita income, the Human Development Index, and the debt situation in Nigeria. And speaking about the debt profile Nigeria has, it's quite unfortunate because if you consider the numbers, if you go back in time to 1999, Laddie, you notice that Nigeria had a debt profile of $28 billion in external loans in 1999 when President Obasanjo took office. He had an internal debt of about 95 billion naira. Yes? And when President Obasanjo went on with the Paris Club and renegotiated Nigeria's debt, it came down to somewhere around $2.1 billion. And when he was leaving office in 2007, the internal debt was 2.1 trillion. The external debt was $2.1 billion. So, and you notice very well that after they succeeded in renegotiating the Paris, the Nigerian debt with the Paris Club and then reduced it by about $26 billion. In 2006, Fitch started rating Nigeria's sovereign bond rating. The first government sovereign bond rating for Nigeria was published in the first quarter of 2006. And that led to an influx of both hot money, speculative foreign portfolio investments, and non-speculative foreign direct investments. That number rose from somewhere around $4.4 billion to a peak of about $11 billion over the space of about 4 years. And it's quite sad that between 2007 and 2023 today, Nigeria's external debt has risen to $39 billion, which is $11.5 billion more than what Obasanjo met it at in 1999. While the internal debt, the domestic debt, has risen to about 25 trillion. Now, when you add the proposed securitization of ways and means and the 2023 Appropriation Act that says the government is going to raise 8.8 trillion in non-recurrent debt expenditure, you see that number going to somewhere around 54.8 trillion, which brings the total outlook to 77 trillion. So basically, we had 2.4 trillion in 2007. Today, we're talking of 77 trillion. And by the way, Ladi, every Nigerian, even the ones that were born this morning, every Nigerian today owe debt per capita 368,000 naira plus to creditors, both local and international.
All right, but Kelvin, tell me about because some analysts have said it's not about the the size of the debt, that it's the pace, the pace of growth of the debt. How are we doing looking at the pace so far?
The pace is frightening. If some people are saying that it's not about the size, it's the pace is very frightening, because you can imagine President Obasanjo looking at what he left in 2007 at 2.4 trillion, that has risen to 77 trillion naira today. And you can imagine that 29% of your budget is going into servicing debt for 2023. So basically, somewhere around 48% of Nigeria's budget for 2023 is going to go into two line items: debt servicing and PMS subsidy. And that PMS subsidy of about 30.6 trillion is only for 6 months. If the next president decides to remove PMS under recovery on PMS, direct sales, direct purchase, within the first 2 months or 3 months of him being the president, then he doesn't need to provide another 30 trillion naira for PMS subsidy. But two line items alone takes 48%. And those two line items, has nothing to do with growing the economy. It's just to service debt and to make sure that PMS in Nigeria is cheap, which, in my opinion, the daily consumption volumes are seriously inflated. So I disagree that the pace is not as frantic and fast and does not call for concern. It calls for grave concern, because at the level we are today, your debt to GDP ratio is going to rise to 35% of GDP. Debt is going to rise to 35% of GDP by the third quarter of 2023. And that calls for serious concern. Because when you look at and this is why I like referring, let the government, let the officials in government, let them refer back to the law. What does the law say? Because I've heard people say, they are going to decouple debt from revenue and expenditure. What does the law say? Are you breaking the law in going around and borrowing on a borrowing spree? Yes, the government is breaking the law. Because if you look at the Fiscal Responsibility Act of 2007, sections 41, subsections 1A, it says that the Nigerian government can only borrow money to fund capital expenditure and human development. But what are we doing today? We're borrowing money to pay PMS subsidy, and we're borrowing money to pay interest on existing debt, consolidated debt. So it is a cause of concern, and it's very worrying and disturbing.
Right, and obviously, Kelvin, Sub-Saharan Africa seems to be going through, some kind of debt servicing, shock at this time. I've seen a report, forecasting for 2026 that, the whole of Sub-Saharan Africa is having a debt, issue at this time. But how are we doing compared to our African peers?
The reason why, Ladi, I don't believe we're doing well is because our tax to revenue ratio is 6.3 to 6.4%. Our non-tax, both tax and non-tax revenue to GDP ratio is somewhere between 7.2 and 7.4%. That is very low. Even Ghana, that is in a debt crisis and that had a default on its debt, has a revenue to GDP ratio of 14%. South Africa has a revenue to GDP ratio of 22%. Egypt has a revenue to GDP ratio of 18%. Last year, South Africa raised about $122 billion in revenue. How much did Nigeria raise? Egypt raised about $82 billion in revenue. How much did Nigeria raise? So these are the questions we should ask. If we're saying that, we're not doing badly compared to our sub-Saharan African peers, the question we should ask ourselves is, what is our revenue to GDP ratio? And the solution is not by raising tax arbitrarily. Like, for example, the amendment to the Finance Act that was proposed that has generated a lot of protest on a single 50% tax credit on qualifying expenditure and on raising punitive damage for upstream oil and gas companies. And you know, Ladi, what's very interesting about that, from 30 to 50%, what's very interesting is that if you look at the Petroleum Industry Act, for example, there is what they call the Associated Gas Reinjection Act in the Petroleum Industry Act, AGRA, that says that the Minister of Petroleum has the discretionary powers to give permits to oil companies, upstream companies, to flare gas in the case that they are unable to find reinjection and utilization uses for the gas. What it simply means is that if they are unable to find midstream gas gathering infrastructure to be able to trap and process the gas for off-takers, they are allowed to flare gas. So you placing so much burden on companies, both in petroleum and non-petroleum, in a bid to raise the revenue to GDP ratio, is not the solution to the problem we have in Nigeria today. It requires proper thinking. It requires paying attention to the laws, yeah? Because if you really look at the foundation of the problem, Ladi, you realize that there is a huge disconnect between monetary and fiscal policy making in Nigeria.
All right, Kelvin, let's talk about, because obviously it's a funding issue. Everyone's trying to raise revenue, somehow. We see the LCCI recommending that the government should look more at equity, financing. What do you think about that?
Are they talking about like securitizing
Go to
assets?
The capital market and raise funds.
Well, if you go to the capital markets and raise funds, you're talking about the debt capital markets. And if you're talking about the debt capital markets, we're still going back to government bonds. The yields are at somewhere around 18%. Look,
I think it's more like selling equities, at this point, kind of like, making it some kind of package for investors to, invest in.
Look, Ladi, in the capital markets are divided into two. You have the debt and equity capital markets. Yes? The markets where the government goes to raise money is the debt capital markets. Okay? And that's where you have your government bonds and your savings bonds. Okay? So, for example, the planned securitization of ways and means lending, where the government intends to convert that bad loan into a 40-year government bond, is going to the capital markets. The question is, the yields right now, as we speak, are they sustainable? In my opinion, the answer is no, they are not sustainable. The government borrowing at 18% is a real cause for concern and is a signal that there's trouble in Nigeria with the management of the economy. So I don't think going to the capital markets is a solution to the problem.
All right. What other solutions do you see, Kelvin? We did get, some experts actually recommending debt restructuring. Is that what we should be looking at?
Look, I'll put it like this. I'll give you like a short scenario. So you explain, you understand the connection, the nexus between monetary and fiscal policy, and how, when we're looking at this issue of raising funding and rebalancing and restructuring the Nigerian economy post this election that is coming up in February, we have to look at it from a holistic point of view. I'll give you a scenario. So if you look at the Naira Yuan swap, for example, that was consummated in April of 2018 and that failed, you consider the fact that today as we speak, China controls 26% of all international trades that Nigeria does. America controls 11%. And the government, in its good intention, wanted a situation, for example, where traders could get from M directly with the Chinese yuan without using a third-party currency and without relying so much on the US dollar and the pressure of getting the US dollar. And so far, between 2018 and 2023, only about $600 million of transaction has been done. And what's the reason? The reason is because Nigeria, the Central Bank of Nigeria, does not have enough foreign reserves as banknotes with the People's Bank of China, the PBOC, to be able to provide liquidity for settlement. And I'll tell you what, Laddie, we'll go back to the CBN Act, sections 24, subsections B, that says that the central bank is only obligated to place foreign reserves in countries where they have freely convertible currencies. The Chinese yuan is not a freely convertible currency. That's why only 2.7% of Nigeria's foreign reserves is with China, while the remaining about 96.30% is with the US Federal Reserve. Now, let me tell you how all this ties into how we should begin to look at this problem. We have an exchange rate problem, and we have a problem of lack of supply of dollars that is caused by several factors that we've discussed over time. But in looking at the problems Nigeria has, the federal government needs to realize that if it doesn't rebalance its policy to adopt a floating exchange rate mechanism where you have one single exchange rate instead of 6, and you have investments coming to Nigeria, and you have a situation where there is no spread between the official and the parallel market, and the pressure on the naira devaluating is not causing inflation to go up, and that interest inflation yield to continue to be adjusted, because anytime inflation goes up, the Monetary Policy Committee has to raise the interest rate in what they call the inflation to interest yield curve. And as they raise that interest rate, you see that the government has to pay more money to borrow. It pays more money to borrow, it ties it back to your debt servicing. So you notice that as bond yield spread has risen from single digit of somewhere around 5%, 6%, 7% to 10%, 13.8%, and now somewhere around 17.8 to 18%, the budget that the government has presented to Nigerians has consistently shown an increase in the debt servicing costs. That's how it ties. So that's why I say, look, in looking at these problems and looking at the revenue shortfall, it's important to look at it from both a monetary standpoint and a fiscal standpoint. It's important to look at holistic solutions. And I believe very strongly, especially for sections 24 and sections 38 of the CBN Act, it's high time the Nigerian Senate amends the CBN Act and makes structural changes that will aid more efficient monetary policy direction that will support the fiscal side of the equation.
Right, and it looks like 2023 is definitely shaping up to be a year that debt is going to be a major conversation, going forward, even with, most of sub-Saharan Africa at this point. But Kelvin, we're hoping for the best. We're hoping we solve this debt issue, at some point in Nigeria. Thank you so much. That was Kelvin Emmanuel, CEO at Derry Hills. It was great having your perspective. Thank you.